Hey, good morning. Let's go over today's trade plan. So in the overnight session, the expectation was for ES to balance within a range, and the move back up towards the 88 resistance ended up attracting responsive sellers. The 88 to 91 area essentially marks the bottom of the prior range that we broke down from, and as long as ES is holding below it, we know that the sellers can step in and take over in the short term as well. And from there, we can get a pullback and quite easily test the 78 half to 80 half. That also marks the previous VPOC and the gap fill. Now, at 78 half to 80 half, we need to be seeing some strength in the underlying internals. We need to make sure that we're not seeing any major weakness in the other markets in order for buyers to defend that zone and have a shot at providing a good long setup at initial support, 78 half to 80 half. So that zone calls for caution because given that yesterday was quite bearish, we could still go down and test the 72 half to 74 half area again, perhaps even yesterday's low at 70 quarter. On the downside, the major support at this point is 64 half to 67 half, which marks the bottom of the current larger time frame balance area. So in the event that we head lower and we test 70 quarter or 64 half to 67 half, that's an area where we could still get a decent buy response. Now, buyers can still be active at initial support, 78 half to 80 half, and 72 half to 74 half, but over there we need to see some setup in real time. We need to make sure that we're not seeing very negative advanced decline line at 78 half to 80 half, and that we're not getting major downside momentum as we test that zone if we're going to trade it to the long side. So those are valid support areas, but they're not automatic long setups. That's where we need to use our judgment, our discretion, and make sure that in real time there aren't any major warning signs or red flags going against the buyers in order to take a long setup at 78 half to 80 half. Otherwise, that zone would be better used as a target on shorts rather than a spot to enter long. So, that's something that we will have to determine in real time. So we do have to be careful at the initial support zone. 72 half to 74 half has better odds of attracting buyers first time down, especially if we go down there in more of a straight line. On the upside, 88 to 91 again is important resistance, and if the sellers are to remain dominant, then ideally ES holds below 88 to 91. In the event of a breakout above 88 to 91, sellers can still defend 95 half to 98. They can still be active at the open gap at 99, and then the 2100 to 2102 zone is still valid as well. And on the larger time frames, as long as we're holding below the 95 half to 98 and the open gap at 99, there's still it's still going to be more of a balanced market, not necessarily any big conviction one way or the other. So right now, that's the other thing to keep in mind is that the market is simply trading within a big balance, and there's really no big directional conviction one way or the other. And the idea is that any upside move can fail, and sellers can be active and defend 88 to 91 and 95 half to 98, and then pull back into the overnight range. And at the same time, any downside breaks can still attract buyers as well. But because yesterday we broke below a multi-day range, it's still better to be a little bit more aggressive in the short term on the sell side rather than the long side. On the buy side, we still have to be a bit more careful because of the fact that we broke below a multi-day range yesterday. But overall, bigger picture, we are still simply balancing within a range, and the range low on that larger time frame balance is this 64 half to 67 half. This marks the bottom of a larger time frame balance area, and on the upside, 10 half to 12 half for the most part marks the top of that balance area. I know technically the all-time high is 1975, but for the most part, 10 half to 12 half actually ended up capping the upside on most sessions, and this ended up being just a kind of a failed breakout attempt. So, bigger picture, that's the big range we're trading in, but the expectation for today is to balance, kind of stay within in that range, and simply balance within a range, have more of a two-sided consolidation type session, but it's still going to be better in the short term to be a bit more active on the shorts and be a bit more conservative on the long side, at least for today. And then, depending on how today plays out, the buy side could still regain control next week. But for now, the overall bias is very neutral, and we're open to trades on both sides with a little bit more focus on the short side. On the econ calendar, we have the ISM Manufacturing Index out at 9 a.m. Central Time, consumer sentiment, construction spending out at 9 a.m. Central Time as well. So, the first 30 minutes especially can be very range bound and two-sided as the market waits for those econ reports. And then once the econ's out of the way, then perhaps we can get a little bit of directional movement. But the overall idea is still to look for more of a balanced two-sided session. So those are the main thoughts heading into the open. Let's see if the sellers can defend 88 to 91. That will really help set the tone on the entire day, and we'll take it from there.